Let's find out. Let's bring in Scott Rothbort. He is the president and founder of Lakeview Asset Management, also an experienced investor when it comes to food stocks. Scott Rothbort, good to have you with us. Thanks for, seeing you in the flesh is so much better than just radio, but it's good to see you here. Thank you. And I'm glad you brought all these treats, whether it's Kraft macaroni and cheese or Fig Newtons. Why, first of all, why would a deal to acquire Cadbury, why would that make sense for Kraft?
Well, I think what it gives them is entree into the candy and confectionery business, which really is absent from their portfolio. It also gives them a larger global reach, which I think is what the company needs.
And so would it make sense at this kind of a price? I mean, this is almost, what, a 16, what are we talking about, 16 and a half, $17 billion here?
$16.3 billion at today's price, which really was cheaper than the price they offered at 2 months ago because of the change in the Kraft stock price. But, part of this deal is going to be in debt, and they've already have a tremendous amount of debt in their balance sheet, and they're just going to assume Cadbury's debt and then take on more debt to do this deal, and I just don't see whether or not they're just biting off more than they can chew, so to speak.
Well, there was a report, I believe, during this whole process, the report coming, I believe it was from the New York Post, talking about the potential sale of some of Kraft's coffee business in order to raise some money. We've talked to Alexia Howard, for example, at Bernstein Research, talking about how they would raise the money. I mean, is this going to put pressure on Kraft if indeed they say Cadbury were to say, okay, we'll take the money. Go ahead. Now go find it.
Right. It's going to put a lot of pressure on them. Certainly, right now, they're in the sweet spot in terms of the corporate bond market, because corporate bonds are hot right now, and they do have a decent credit rating. So I think they'll have no problem raising that money. And neither did Ambev when they bought Budweiser, and that was in the middle of 2008, which was one of the worst years that we've had for the commercial funding market. But still, let's say they do complete the deal, they're able to borrow this money, then they're going to have to divest, as you mentioned, and they're going to have an awful lot of debt service to make. And I just don't know whether or not a company the size of Cadbury makes sense for them. And I think there's another aspect of the deal which people aren't looking at. Cadbury is a British company, and I question whether or not these two corporate cultures can mix.
You think that the flight from maybe Chicago all the way to London's Heathrow is a little bit too long for them to keep tabs on what's going on? Those
are very, very difficult acquisitions and integrations, and it could be challenging. And frankly, I'm not that enamored with Kraft's management team as it is. And
Why not? I mean, Irene Rosenfeld coming in, trying to really streamline the operation and focus on items that are profitable, not just going after market share. Has that been the strategy?
I think to some extent she has succeeded. But overall, I just don't feel that this is a top management team, as opposed to Pepsi, which I think has one of the best management teams out there. And I'd put Indra Nooyi up against Rosenfeld any day.
Why is that? What are some of the distinctions?
I think strategically, she's much smarter. I think that she's much more open and honest with the investing public. For instance, last week Kraft announced their earnings. When they did, it appears that they guided higher, but actually they didn't guide higher. They guided lower because of the way that they performed in the third quarter. So I don't think Wall Street, really looks at Kraft with the same type of star as they would Pepsi or perhaps some other companies out there.
Well, I'm glad you mentioned this whole idea of other companies, because we're going to talk about that. But are there businesses that Kraft runs right now that you think would be enticing as an investor for them to sell off? We'd like to see them get rid of some other businesses?
Yes. Look, there are certainly some underperforming brands, and they have been actively doing that. So I think they're moving in the right direction. The problem is they may have to move even faster if they buy Cadbury. And certainly they may even sell off some of Cadbury's holdings as well.
Because that would come also with the Trident, the gum business for Cadbury as well.
Right.
Okay.